Hi students and friends. Today our discussion is some basic terms which are used in an accounting. We can say these are the common terms related to the accounts which are used everywhere. As a student or a beginner in accounting should know clearly these terms. The knowledge of these terms is helpful for the students to understand accounting more easily. The first accounting term used in business is business transaction. Business transactions are events which is happened in a business on a particular date. Business transaction may be purchase of the goods, sale of the goods, payment of some expenses, and the receipt of some incomes. So different categories are there. In short, we can say any transaction or any event we can call as economic event. Any economic event which is happened in a business on a particular date is known as a business transaction. Second one is account. What is the meaning of account? This word is so familiar to us because most of the people are using this word. This account is overstated, your account is credited, your account is debited. So everywhere the people are using this word. Account means record of the transactions. Record means history of the transactions. For example, rent paid, salary paid, all the details you can see. Suppose you are taking salary account. You will get all the salary details which you are paid. And you are taking the account heading another, fixed asset account. Land, building, plant, machinery, furniture, many assets are there. These assets details you will get from that particular heading. So it is the record of transactions. Number one, business transaction. Number two, account. Account is a record of transaction under a particular header. That is telephone expenses, electricity expenses, salaries and wages, depreciation are the examples. Then third one is capital. What do you mean by the term capital? We know that in order to start a business, we need money. The money should be contributed by the owner. So we can say the amount or goods or any asset which is contributed by the owner to start a particular business is known as capital. This can be called as owner's equity or otherwise we can call as net worth. Another term is drawings. The amount or the goods withdrawn by the owner for his personal use is known as drawings. Sometimes the owner may take some money or goods from the business for his domestic or personal purpose, can be called as drawings. Next one is liabilities. What do you mean by a liability? Liabilities are the obligations or the debts payable, or we can say amount payable by the business is known as liability. Liability may be internal liability and external liability, short-term liability and long-term liabilities also there. The liabilities which are to be paid internally inside the organization, that we can call as internal liabilities. If a liability which needs to be paid outside people, that we can call as external liabilities. The liabilities may be short-term liabilities and long-term liabilities also there. Short-term means the liability which is paid within a particular year is known as short-term liabilities. If a liability you want to discharge after 1 year, that type of liability is known as long-term liabilities or fixed liabilities. Shorter period settlement is there, longer period settlement is there. Shorter period means within 1 year, longer period means more than 1 year. So current liabilities and fixed liabilities, otherwise we are calling as short-term liabilities and long-term liabilities of the business. Next important term is assets. Assets are the economic resources which are held by the organization as on a particular date. Assets we can call as economic resources which are owned by the organization in the form of land, building, plant, machinery, furniture, etc. So the economic resources of the business is anything which enable them to get an economic benefit in the future. If any item that gives benefit in the future. If a company or an organization is using the assets, it may be land, building, plant, machinery, furniture, etc. So we are expecting them some benefit in the future. So any item we are getting some economic benefit in the future is known as an asset. An asset may be non-current asset and current asset. Non-current asset means any asset which are held by an organization for a longer period of time. Any asset which is purchased for the use of longer period of time can be called as fixed asset. Some assets we are purchased for a short period of time. That asset can be converted within a short span of time, we can say within 1 year, into cash. That is known as current assets. Assets may be tangible asset and intangible asset. Tangible asset means what? Any asset which have physical existence is there. That is known as tangible asset. Some assets, they are assets, but they don't have physical existence. We cannot touch or we cannot feel. That type of asset is known as intangible asset. So tangible, physical existence. Intangible, there is no physical existence. Example, goodwill means the reputation value, or the computer software, or the trademarks, franchisee, etc. No physical existence. You cannot touch, you cannot feel like land, building, plant and machinery. These type of assets we can call as intangible asset. So assets, fixed assets and current asset, tangible assets and intangible asset also there. Fixed assets, current assets and tangible and intangible asset is also there. One more asset classification is there. Fictitious assets. Most of the students are confusing about the fictitious asset. Actually, these fictitious assets are the losses which are incurred in a particular period. But these losses we cannot write off that particular year. That means it is depend on n number of years in the future. They are losses not written off in the year in which they are incurred, but in more than one accounting period. These losses are affecting more than one accounting period. So whenever you are hearing this word fictitious assets, actually these are not assets. These are the losses of the business which can be written off not only a particular period but in a future number of years. Example, advertisement suspense account. We know that advertisement is a big expense for the company. We cannot write off these big expenses in a particular period. It will affect what? The profitability of the organization in the same period. So what we will do? We will divide into 5 installments or 6 installments according to the company's nature and write off every year. Then discount on issue of debentures or the loss on issue of debentures. Sometimes if a company is issuing debentures to the public, there may be some discount or loss may be happen. This discount or loss can be written off in 5 years or 4 years, the coming years. These type of losses are known as fictitious assets. They are not assets, but they are the losses of the business because there should be some balance amount is there. That's why we are write off in the future years. Then what do you mean by expenditure? Another term commonly used in business. What do you mean by expenditure? The amount spent for the purchase of asset, goods or services. Frequently required transactions. An organization purchase different types of assets, different types of the goods, or even providing some money for getting some services also. So the amount spent for acquiring or the purchase of the assets or goods or services can be termed as an expenditure. Expenditure may be capital expenditure, revenue expenditure, deferred revenue expenditure. An organization, you can see 3 types of expenditures are there. Capital expenditure, revenue expenditure, deferred revenue expenditure. Capital expenditure means any amount spent for the acquisition or the purchase of the fixed asset. Example, Purchase of the land, building, plant, machinery, furniture, etc. are the examples of capital expenditure. Same way we can say an organization required not only capital expenditure, some other expenditures also. They have to run the business. They have to maintain the business. So in order to maintain or in order to run the business, we have some frequent expenses are there. Repeating nature expenses are there. They are known as revenue expenditure. Revenue expenditure, the benefit of which is consumed in the same accounting year. The benefit of this expenditure, salary paid, same accounting year, we are charging that one. Rent paid, water electricity paid, salaries and wages paid, any expense you are paid, which can be repeated every year. The benefit will be in that particular period only. That type of expenditure is known as revenue expenditure. Then one more expenditure is there, deferred revenue expenditure. Suppose you are looking in the deferred revenue expenditure, you can see in the nature of capital and revenue expenditure. Both the nature you can see there. The benefit of some expenditure is not only a particular year, but in a subsequent years. So you have to write off this expenditure in that particular year, because the benefit you are receiving not only in a particular year, but in a number of years. Heavy advertisement expenses you are spending. Your business is shifting into a more advantageous place. The benefit of this type of expenditure will not be or last not for 1 year, but more than 1 year will be there. These are the main expenditure classifications. Next important term is purchases. An organization required goods, that means raw materials, for the purpose of manufacturing and resale purpose. The goods are procured or purchased by an organization for manufacturing or for resale purpose is known as purchases. Purchase may be cash purchases or credit purchases. Next, sales. It is the most important revenue of the organization. Sales means the amount received by the organization while selling of goods or services. Sales may be cash or credit. That is depend upon the nature of the organization. Then stock or inventory. What do you mean by stock and inventory? The goods available an organization on a particular date is known as stock or inventory. Asset held by an entity for the purpose of sale. Any asset which are held by an entity for the resale purpose is known as stock or inventory. Stock or inventory may be opening stock and closing stock. Goods in hand at the beginning of the period is known as opening stock of the entity. Goods available at the end of the period is known as closing stock of the organization. The closing stock becomes the opening stock of the next year. So opening stock and closing stock, two important terms. Then trade receivables and payables. Trade receivables and payables are there. Whenever you are selling your goods on credit, you will receive the money later only or after a stipulated period of time, 3 months, 2 months, 1 month, etc. The amount received by an organization on goods and services is known as trade receivable due to credit transactions. It will be bills receivable and debtors. The trade receivable includes bills receivable and debtors. Two joined together we can call as trade receivables. Same model we have payables also there. Whenever you are purchasing goods from the supplier, sometimes you will pay the money immediately, or if you are taking time to disperse the payment, 2 months, 3 months after only you have to pay, or you will pay. That is known as payables. Trade payables. Trade payable includes bills payable plus sundry creditors. So accounts receivable from the credit sales. Trade payable from the credit purchase. We have to pay. The receivable, we will receive the money from that one. So these are the basic terms commonly used in accounting. So you have to study clearly one by one to understand these terms. Thank you.